It shouldn't be about how much you're going to make, how much you're going to make off this client. It should be how can you help this client? I always say if you help the client, the money will always follow because they'll give you referrals, they'll do other things, and you'll eventually make money from helping that person. I mean, typically you would anyways, because we do get paid for our work, but it's not chasing commissions and doing anything like that. So in my opinion, if you do what's right for the client, you'll never have an issue. So I always believe in what's called like a no-sell sale, right? Not that we're really selling anything, but I always say if you find yourself in a position where you feel like you need to sell something to the client, where you're like, all right, how do I pitch this to the client? How do I, or like, let's get pumped, let's go in there and sell this thing. It's probably not right for the client because if it's right for them, you don't have to sell it to them. It sells itself.
Welcome to the Active Advisor Podcast, brought to you by Harbor Capital. Join us as we learn from pros who have helped thousands of investors live better lives. I'm Brian Moore, and I'll be chatting with some of the brightest minds in the financial advisory business, bringing you insights on practice management and investment research that works for advisors and their clients. Joining me today on this episode of the Active Advisor Podcast is Brian Keenan, CFP, President and CEO of Keenan Financial, based in Boston, Massachusetts. Keenan Financial is a wealth management and financial planning firm that provides comprehensive wealth management services to a select clientele of high net worth individuals, families, and associations. Brian and the team at Keenan believe in building long-term relationships and are committed to providing services tailored specifically to each individual client. His company serves as a financial and insurance concierge to their clients. Brian holds numerous licenses within those fields. Brian's clients include individuals and families where he offers an array of services from financial planning and investments to insurance and mortgages. He also serves business owners and businesses by offering expertise in setting up benefit plans, all forms of liability insurance, and succession planning. He handles all that for his clients so they can focus on what they do best. Welcome and thanks for joining us, Brian.
Thanks for having me. I'm pleasure to be here.
It's a great background behind you. I assure everybody that it is real. So we asked you about that just before we joined.
Yeah.
So one of the things, besides me drifting, staring at your background, typically I found, at least in my journey into the financial business, there's always something that kind of, tugged at you, kind of captivated your attention. What's the first memory you have related to money or investing?
I think it's just from when I was young. I mean, the idea of being able to make money with money was always something that really appealed to me, whether it's, putting it probably when I was really young in a bank account, or maybe, my parents might have fooled me and said, if you put money into this piggy bank or something and you look in a week from now, there might be a little bit more in there. Maybe they did something like that. So to pinpoint the exact one, I don't know. I just knew I always was kind of drawn to it. And trying to figure out in different ways in which you can do it. But I think just the idea of being able to take money and be able to make more money with it was definitely the number one thing that attracted me to sort of the finance industry.
Nice. And typically one of the things that definitely people, they tend to gravitate towards the finance industry. You see a high correlation with people who play sports. And there, I don't know if it's the competitive nature of the two that seems to kind of, bring it out in both of us or in all of us. But I know you're a hockey fan, and I know you've been playing on a men's league for quite a while. Has your dedication to playing hockey had any impact on your career path or success thus far?
I mean, I think all sports, right? So, I mean, I recently did some of the hockey leagues with one of my colleagues who convinced me to do them with him. So, but for the most part, I think you hit the nail right on the head. Typically, the majority of the top producing advisors in our industries are former athletes, whether it's high school or college. And I think that all comes back to the competitiveness of it. Not only do they want to be a good advisor, they want to be, the best in their class of advisors at their company. They want to be the best in their company. They want to be the best in the industry. So in my opinion, that's really where it comes from. It's just, you want to be the best. For me, if I sit down with a client and they're like, we're also speaking with another advisor, it kind of turns a gear up in me. And I'm like, all right, well, there's no way we're going to lose this. Like, you're a client. You just don't know it yet. So, that's kind of, I think, where it comes from for a lot of people, but it's definitely something we look for in our recruiting when we bring in new advisors is, what is their level of competitiveness? We have a lot of companies, you probably know, put out, scoreboards or weekly, whatever, how much business you've done and this and that. And we do that in our office. We make it a little bit more fun. We use nicknames and not everybody's, full name. So it's a little bit more fun that way. They like to call it the power rankings. just like in football, ESPN puts out, I think. So, we just try to tailor to that. We're like, hey, if you guys want to be competitive and you want to compete, we're going to make it fun. We're going to have ways to do it. So, we try to always find different ways for them to be able to do that in the office. But you're absolutely right. The competitiveness is really where it all stems from.
No, that's great. And typically, I know you've owned your own firm and you started at Keenan. So I would like to think that, when you were working at firms prior to Keenan, that you definitely had some idea that you could do something or you could do it better or somehow enhance upon something. So you made the decision to go out on your own in 2016 and start Keenan Financial. Looking back, was there a pivotal moment or a moment you can point, isolate when you knew that your direction and ultimately your decision was to start Keenan, or was this something you just kind of been considering for a while?
I'd only had 3 years experience when I decided to start it. So for me, it seemed like a while because I'd been thinking about it for about a year or so. But obviously being 25 at the time, I was like, I don't know if anyone's going to want to work with me being that young, or any clients want to come with me or whatever it is. So I knew I could get clients. I just didn't know what they would think if I was also the owner of the business. So from that standpoint, I had been thinking about it for about a year or so. But for me, there was really 2 points that kind of drove it home for me of, all right, it's time for me to go. Was one, on the selfish side of it was just the pay that you receive. You're like, I'm putting in all this hard work, and a lot of companies are set up where there's a manager, a VP, people above that who all get a percentage of your business. And, I was just kind of tired of that, where, that was when I was like, all right, well, I'm doing all of this business and nobody even knows where I am or what I'm doing, the clients I'm getting, the business I'm bringing in. And that's when the second realization came, and I was like, they don't even really or I don't really need them anymore, as far as what we're doing. And even just different philosophies on investments or products or whatever it was. Mine was a little bit different than the way that I was trained to do it. So for me, it was like, well, every time I come back with a new client, they ask, well, why didn't you do this? Why didn't you do that? And I said, I think this was better for the client. And, so I'd, always get kind of yelled at for that. So for me, it was like, what, we obviously don't see eye to eye. I can leave and I can, ideally get paid more because I'm going to be keeping all of the revenue. But also I don't necessarily need you anymore. So I don't know why I would, continue to pay you. But then, really the most important realization was for the clients. I sat down with a bunch of clients where they were off, hey, can you help us with taxes? Can you help with, can you look at this home and auto policy for me? Whatever it might be. And really we just, I kind of came to the realization of like, hey, you know what? Why don't we do this for clients? And I kept asking, they're like, oh, well, that doesn't pay a lot. Why would you waste your time with that? Or no, we're not licensed for that and we never will be. Focus on what's going to make the firm money. And for me, it was like, well, if I have this client, why don't we help them? There's so many different areas. They're giving us everything and asking us for help and everything. And we kind of say we do. Everyone says, oh, we do holistic planning and whatever, but we were really only focusing on like 1 or 2 things out of like 6 or 7, it was, why don't we just do everything when we're there with them? So for me, it was, let's look around. I interviewed a bunch of places. Is there anywhere where anybody really does this? At the time, at least, I couldn't find anything. I probably did, 15 to 20 different companies that I interviewed with, just trying to figure it out. And nobody really did that. So that's kind of when I came to the realization of like, hey, let's just go for it and see what happens. I'll try it on my own. If it doesn't work, I can always go back and, rejoin a larger firm. But it was definitely it's definitely the best decision I've ever made. So pretty pleased with it at this point.
Well, that's awesome. That's awesome. And congrats.
Thank you.
So I heard you mention that you were kind of concerned that you may have, trouble attracting people to work with you. As a kind of a follow-up to that tidbit that you mentioned, I heard there's an interesting story about how you managed to reconnect with an old friend who's now become a colleague and an integral part of the business. If you wouldn't mind, tell us a little bit more about how that came about.
Yeah, absolutely. So that's Tyler Dolan, who is our vice president. He's also a certified financial planner. He does a lot of different things for us. He handles all the trading. He does all the taxes for our clients, a lot of different things that he does. But ultimately, I was really looking to grow my practice. The first few years, it was just myself. It was nice to kind of get out and do it. And then at that point, I said, if I want to be able to provide everything I want to, we need to be able to bring in more people to help with stuff. So oddly enough, I ran into one of my friends growing up, his father at a grocery store, one that I never really go to. It was in a different town, but I was coming home from a meeting and usually I would go after the gym on a Saturday to the same one pretty much every week. I said, well, I'll pop into this one, a Market Basket, and I'll go here instead. And just in the parking lot, I ran into him and talking with him, he's like, so what are you up to these days? And I was telling him, and he's like, oh, you should connect with Tyler Dolan. And, he's doing something similar. And I forget if he mentioned he was looking to do something, or switch companies, whatever. I don't remember exactly how it unfolded, but at the time I was like, I don't know. He was, he's 3 grades above me. So he was the senior when I was a freshman kind of thing. The local stud, right? The captain of the hockey and baseball teams and all that stuff. So I did play 1 year with him of Little League baseball. I always kind of played up because my brother was a couple years older. So to make it easy for my parents, I always had to play up, which was good for me, I guess, but not always fun in those times. But so, I ended up thinking about that, and I went home and I looked and I was like, oh, he is a CFP and whatever. And then oddly enough, the very next weekend out of the market basket I normally go to, who do I run into but Tyler in the produce section. And so, we started talking there, and he was like, what do you do? And we basically realized we do the exact same thing. So, he was asking like where I worked and that kind of stuff, and how to basically like, how can we work together kind of thing, potentially going forward. And so, we talked a little bit, I think, over text or whatever, and then decided to meet up for drinks in our hometown. And from there, that was kind of the end of it. That's when he gave me the verbal commitment at the time. And we haven't looked back since.
Wow, that's awesome. That's awesome. It really shows what you can find in grocery stores nowadays. As they look
like it was meant to be in a way, I guess. It was like,
no, without a doubt, definitely. And it sounds like he's added, a lot to the business as well, which I'm sure everybody appreciates. You offer comprehensive wealth management and financial planning services at Keenan, emphasis on the comprehensive. Can you talk about the spectrum of services you offer, and if that breadth of offering is central to the Keenan financial value proposition?
Yeah, absolutely. It's 100%, valuable to us, because that is our full proposition. So our goal, as you mentioned in the opening, is to be a financial and insurance concierge for our clients. Anything financially or insurance related, you can call us. We'll be able to handle it for you. So we really start typically with financial planning, which, a lot of different firms do. There's some who are, some of the wirehouses maybe just focus on asset management, right? Then you have some fee only financial planners. So we do both of those. We do life insurance, which again is relatively common, long-term care, disability, health insurance. That stuff's pretty common. But we also add in the property and casualty. So homeowners, auto policies, renters, boats, things like that. Anything you need to insure, we can typically help you out with that. I'm also mortgage licensed, so we can help broker those for you as well. And then we also have our tax team where we do clients' taxes. So the goal, again, is to any questions you have, you can call us, we'll handle it for you. And since we do everything for you, it makes it that much easier. So, if a client asks me, well, why would we, do everything for you guys? My response would be, well, when's the last time your wealth manager, your money manager, your financial planner, your life insurance agent, who maybe does your long-term care as well, whatever, your property and casualty insurance agent, your mortgage broker, and what else am I thinking of here? Your accountant all got together and worked on your financial planning, at the same time. And the answer is typically never, right? But for us, it's every day. That's what we do. So I bet you would have a much better financial plan if your financial planner sat down with your accountant. We work with other firms in Boston as well for the attorneys to help with estate planning. But so we sit down with them a lot. But if you get all those 4 or 5 people in a room together to work on just your financial plan, it's going to be a lot better than if you just go to some financial advisor who's like, we do financial planning and this and that, but they don't know the breadth of everything, which is, one of the reasons why I got the CFP. I was like, well, this is the highest designation that I could get for the planning. So let's do that. Obviously, that's a pretty difficult exam, but it was something that I was like, this is absolutely worth it. If there's something I don't know, I need to know, so that we can then, better serve our clients. So the goal is pretty much to just be able to do everything, but obviously some people will a la carte it, right? They might be like, oh, my brother is a P&C agent, so I'm just going to keep my home and auto through him, or whatever it is. And that's fine too. But for the most part, most people will just say, yeah, this is great. You guys can handle it for us. So it's gotten a little bit more difficult since COVID, now that everything's on Zoom and we're getting clients all over the country. So you got to get licensed in all different states and things like that. So it certainly put another obstacle in there, but it's also fun, because then literally every single day is different. Every client you talk to, there's something different, because not even their states don't have the same rules or tax laws are some things that are applicable to them as well. So, but it's a lot of fun, but that's definitely 100% of what we do and that's how we stand out is we're just combining 5 or 6, because for us, we were saying we're referring all these people around. Nobody's really referring back to us, right? They all have existing relationships and this and that. So we figured, why refer out business? We can keep it all in house. And then, that way we can keep our fees lower because we're getting paid in 5 or 6 different ways.
How are you incorporating investment research and portfolio construction into all the other things that you do as a business owner and advisor? Are there external resources or platforms that you have woven into your business? And how open is your architecture on the investment side?
Yeah, it's a great question. So, it's very important, right? Obviously putting a plan in place is very important, but then you have to take the actions on that plan and invest the money and make sure it's invested properly. So for us, as far as softwares go, you name it, we have it, in our industry, but we primarily, the two, we use the most is probably Tamarack and Morningstar. Are the two that we go into. Obviously, Bloomberg's a great one as well, but those are just the ones that we're most comfortable with. We have different planning softwares, whether it's Money Guide Pro or it's eMoney. Again, you name it, we pretty much have it. So, but really, we drive our investment philosophy from the financial planning, right? If we don't know where you stand today and where you want to go, well, how do we know how to invest your money? If you just said, hey, here's $1 million, invest it for me, well, what's the goal? What's the time horizon? What's your risk tolerance? What are we looking for? So typically we'll create the financial plan first to figure out where you are, where you need to be, and then how do we go about getting you there? What's the rate of return we're going to need to get on top of your savings capability that's going to allow you to get there. So for some clients, we can be like, hey, you can be more conservative here. And for other clients, we're like, hey, unfortunately, we got to be a little bit more aggressive than you want to because we're behind. We need to start saving a little bit more money if this is where you want to be. So it really stems from the financial planning, but we keep it as open architecture as we can get. I don't think we can get any more open than we are now. If there's an investment that an advisor can get their hands on, we're able to get our hands on it. Any mutual fund, ETF, bond fund, you name it, we should be able to do it unless there's some sort of proprietary, company one that they keep just for their company. But let's be honest, they're typically not usually the best ones anyways. So we're not too concerned about that. But so that's really the majority of it. We don't have any Keenan financial mutual funds, Keenan financial, insurance policies or anything that we offer. So we just kind of act as your quarterback. We go out, we find the best ones for you, and then we bring them to you. Here are your options. Here's option 1, 2, and 3 in order of what we think is best. And which one do you want to do? Typically, everybody picks number 1. Sometimes they pick number 2. Sometimes someone, we look at our portfolios now, typically 18, 20 funds, something like that inside of them. We use Fidelity as our custodian who we love, but at the moment, I don't think we have a Fidelity fund in there at the moment. That doesn't mean they don't have great funds. Of course they do. But at the moment for, what we're looking at for some of our clients and the different portfolios that we have, I don't know if we have one in there, and all of our portfolios are different. So but that just kind of speaks to the independence that we have in the open architecture, and that, we're not forced to use any certain funds. Or, if we open up an account for you and, we showed you a fund and maybe it had an iShares ETF in there or something, and you said, well, I don't like iShares, no problem. We'll take it out. Here's the next best option for that one that we think fits you. Are you okay with, the Vanguard or the Fidelity, T. Rowe, or, whoever it might be? And so that's really where it drives from, but it definitely stems from the financial planning, because without a plan, we don't really know what we're trying to do.
So with all those inputs and being able to kind of really amalgamate everything into one, when you go and sit down with them to design the client portfolio, do you typically lean towards actively managed investment products, or are you passive, or are you some sort of mixture in between?
A little bit of a mixture in between. Historically, kind of leaned more passive, just because a lot of people tell you can't beat the market, right? Which is kind of true. Sometimes I do say that. I'm like, if it was so easy to double your money in the market, everybody would do it and would all retire at 30. But unfortunately, nobody has that one crystal ball. So we think active management is great too. Right now we're using it a little bit more in our bonds. There's a lot of things going on with the interest rates, right? They keep upticking and different things going on there. And then with the international funds, all the different things you're hearing and seeing on the news, everything going on in different countries. Well, it's very, very difficult for us to try to, myself individually, keep on top of that, as well as all the different stocks in the US. So if there's someone who specializes in, Southeast Asia stocks or whatever it is, I would rather hear from them and the other professionals at multiple different companies who that's what they focus on. That's where they're, they log in their computers every day. That's what they're reading about, just that one area. So, right now we're going a little bit more active management in those areas so that they have the flexibility in what they want to move into and invest in inside of those funds, rather than just being kind of stuck with an indice or something like that. But, it's definitely a blend and a mixture for us overall.
Well, that's good. I mean, I think it definitely kind of keeps your options open and provides you with the ability to choose the best, the best product that fits your client's needs. Speaking of options open, you've mentioned that your clients have your personal cell phone number. And are welcome to reach out at any time. I'd love to know, do they? And love to learn how this became kind of your part of your business practice and why it's important to you.
Yeah, it's a great question. So for me, back in the day, I was basically trained, don't give your cell phone numbers to the clients because they're going to call you on Saturdays and they're going to call you on, at 10 o'clock at night when you don't want to be called. Not the case, not even close. So for me, I used to have an office phone. And I used to just forward it to my cell phone anyways, because before Zoom and COVID in those days, I was driving around to meetings all the time. So I was always on the go. And so some days I wouldn't even go into the office. So I didn't want voicemails to sit there for 3 or 4 days. But what I realized is that there was always mistakes with the technology, right? Like it wouldn't always forward. It wouldn't always do what I wanted to do. And even if I saved a voicemail on the desk phone and on my cell phone that it was supposed to forward to, occasionally it would just be like, you have reached 617. And then it just sounded kind of sketchy and weird, which a couple of people mentioned that. So I was like, all right, I'm done with this. So I just was like, here's my cell phone, gave everyone my cell phone. So, my clients will call me or text me on the exact same phone that my mom calls me on. And, for me, that's very important. I want you to know it's your money that we're investing. Like this is your life savings, it's serious work. And if you need access to anything, give me a call and we'll be able to help you with it. I did have one client one time, I remember she called me on a Saturday and I wasn't really doing anything. And she's a great client, actually the first one I ever got. She doesn't know that, but, I never told her that. Maybe I will someday, but, so I was like, oh, she's great. And so I answered the phone and she was thrown off. She was caught off guard. She's like, oh, sorry. I was just going to leave you a voicemail. I didn't expect you to pick up. She's like, oh, what did I call about? Hold on. Now I'm forgetting. Because she didn't expect me to, but I was like, hey, I'm not really doing anything at the moment. It was like, 12 o'clock or something. So I figured I'd answer it in case she needed something. But, a lot of times it'll stem, during like tax season, which we just got through, clients will be sitting down with their accountant and they're like, hey, do you have your 5498 or whatever the form they might need for contributions or a capital gain statement, whatever. And, they won't have that tax form on them. And then they're panicking. They don't always remember their logins or they don't have a laptop with them. They can't log in. And so if you just call me, whether I'm in a meeting or not, I can do it for you, or I can have someone else send it over to you. And that way it's just quick and easy. But for the most part, most people call between 9 and 5. Very rarely does anyone call before 9, and very rarely does anyone call after like 6, I would say. That's very rare that we see that. So, and, I always try to answer and get back to them within 24 hours at the latest. But typically people aren't expecting you to get back so quick. I'll get an email and I'll reply. If I'm not doing anything, I'm working on some stuff and someone sends an email, I reply back right away. And they're always, surprised that I answered so quick. And I was like, well, I was just working on, these things over here and your email popped up. So I figured I'd answer it for you. So for me, that stuff is just very important to be able to get back to them. Is, for me, when I look around with different services, pretty much just the responsiveness is really what I care about in a lot of different things. Even if you're not necessarily the best at whatever it is I'm hiring you for, I mean, hopefully you're pretty good, but if you're not the best, as long as you respond and you tell me what's going on with what you're doing for me or whatever, then I'm very happy with that.
It sounds like you are extremely focused on your clients and meeting their needs. Of all the things that you offer in your role and relationship with them, what is it that they need most from you and can't get from a robo-advisor or a DIY approach to financial management?
Oh, that's a good one. So at first I was going to say, what do they need from me? It's usually assurance or just confidence. Most of the time, if someone comes to us and say they want retirement planning, almost always the response is, I don't know if I'm ever going to be able to retire, right? And usually, or I shouldn't say usually, but a lot of times we'll end up doing the planning, and depends on what their age is. If they're like, I don't think I'll be able to retire like 70, we're like, hey, you could retire at 60. Like things are looking pretty good here, and they're like, wow. Or sometimes we'll come across people, in their later 50s or early 60s, same thing. They're like, I don't know if I ever can. And hey, you could retire today if you want to, and you'd be perfectly fine. And so for them, it's kind of that peace of mind where, a lot of them have even told us that they enjoy working more now. They're like, the fact that I know that I could just walk out that door at any point, if I got too fed up with this, they're like, it just makes the day so much easier now. Knowing that they don't have to necessarily maybe cater to their boss as much as they thought they had to, or whatever it might be. So that's usually, I would say, typically what they want is just kind of the confidence, knowing that they're not making any mistakes. As far as the robo advisors go, I mean, sure, in theory, they're great, right? I'm not saying they're terrible. If you're just starting out, maybe, that might be not a bad idea, but I'm not putting my life savings in a technology system. As we mentioned before, we have pretty much any software technology you would want to have in this industry. And they glitch and make mistakes all the time. And we catch that. That's why we watch it and we see it go through. And if anything seems off, we go in and we manually fix it and make sure that it does. Of course, we use it to automate things and make things a lot easier. We can trade all the accounts at one time instead of having to go in and individually trade every account. So that saves us a ton of time, but we do have to double check them and we have to make sure that they do what they're supposed to do. So that's kind of nerve-wracking from my standpoint. Is like, I don't know, man. I wouldn't put all of my money in there and just let it ride and just let a software do what a software does. There's bugs in all of them, but usually it's just the peace of mind that the clients want. But the other part of it is making the mistakes, right? So the robo-advisors, like maybe they can do a little planning these days. I haven't really looked into them a ton. Mainly because when they first came out, those were questions you got. Why should I invest with you instead of a robo-advisor? We don't really get as much anymore. So, I haven't looked into it. Maybe their assets under management are going up, but they seem to be less popular across the people that we come across. So from that standpoint, I don't know. I'm not too concerned about those. I think it's just, when it comes to mistakes, there's other things that the robo-advisors can't do, whether they just manage your money or they just do planning. I don't know. Maybe you might know, is there any that do both? None that I'm really aware of, like, hey, here's a financial plan and now we're going to invest your money in this. And then it just automatically does it. But also mistakes, we'll manage money for clients. And, to give you a story, I had one client who he was about 30 years old and he just changed companies and wanted to move his 401k over to us in an IRA and have us manage it for him. So he's like, I'm just going to go online and do it. And he went to do it online. And, he had pre-tax money in there, he had Roth money in there, and he had after-tax money, which he initially thought before he met me was basically the Roth. He's like, well, I want to put some money in after tax so I don't get taxed on it. So then the money, he had pre-tax obviously grown, we moved that to the traditional IRA, the little bit of Roth after he met me when I was like, that's probably the one you want. He moved that into a Roth IRA. And then the company on the other end was saying, all right, now we're going to move this to a brokerage account for you, just a non-qualified brokerage. And I was like, well, I don't think we want to do that. Even at the time, I was like, you might get a 10% penalty on this for early withdrawal being younger. I'm not 100% sure on that, but I was like, regardless, let's move it into the Roth because you've already paid tax on that and let's let it grow tax-free, for the next, he was 30 years old, 35 years. And he had $50,000 in after-tax money that he had contributed over like the previous 8 years or so. And, I didn't really push it because he went online and wouldn't let him do it. Then I said, let's call him. Like, I'll hop on the call with you, make sure it goes through. He said he called them and they said they couldn't do it. And I was like, we absolutely can. Like, let's get on the line with them. So he finally let me on the line, I should say, and let me do it with him. And they got whoever's on the other end of the phone, got their manager on. We got it rolled over to his Roth. And then, he called me like a week later and he was like, we had 50,000 in there. And he's just like, rule of 72 doubles, if you get a 7% rate of return, doubles every 10 years. It's like, so when I'm 40, it would be worth 100,000, 50, 200. It's like, when I say I retire at 60, it's like, it'd be worth 400,000. He's like, you just saved me taxes on $350,000 of money that I had saved. He's like, now that's going to grow tax-free. And I was like, yeah, I know, and he's like, next time you yell at me and call me an idiot and make sure that I do what you want me to do. It's little things like that. I think that having a person to talk to, having someone on the other line, I don't know if the robo-advisors are really good with if you have age discrepancies. If you're going to retire at 65 and your spouse is 50, there's different planning we got to do there. What are the Social Security ramifications of that and different things that go into it? So, obviously divorce and stuff like that, helping you get forms filled out, right? If you get a 403B or a TSP or something like that, and you need to get it rolled over, it's typically paperwork. Robo is not going to fill that out for you. We'll fill it out for you. Or pension options. You can take single life, joint life, and all that stuff that just gets factored into the financial planning. So I think there's a lot of stuff that we do that robo advisors, I shouldn't say never be able to do. ChatGPT is pretty good these days, but I still think it helps to have a person on the other end of it.
No, without a doubt. And this is one of the most, I think, human businesses, that are out there, that's out there. Just because people want to be able to sit and talk to somebody without a doubt. And we've heard from a couple of different podcast guests before about the importance of having empathy. How does empathy make somebody a better advisor in your opinion?
You care about the client. Is really what I think. It shouldn't be about how much you're going to make, how much you're going to make off this client. It should be, how can you help this client? Right? I always say if you help the client, the money will always follow, because they'll give you referrals, they'll do other things, and you'll eventually make money from helping that person. I mean, typically you would anyways, because we do get paid for our work, but it's not chasing commissions and doing anything like that. So, in my opinion, if you do what's right for the client, you'll never have an issue. So I always believe in what's called like a no sell sale, right? Not that we're really selling anything, but I always say, if you find yourself in a position where you feel like you need to sell something to the client, where you're like, all right, how do I pitch this to the client? How do I, or like, let's get pumped, let's go in there and sell this thing. It's probably not right for the client. Because if it's right for them, you don't have to sell it to them. It sells itself. If we do a financial plan and we show them how the plan works, and we think you should invest in, this aggressive of a portfolio or whatever with these funds, and they see how it's going to play out, then they're like, well, that makes sense. Let's do that. I agree. Right. So, where I was trained to sell certain products and certain amounts of insurances and other stuff that goes into it, that just, eventually I just got sick of it. I was like, why are we arguing with the clients about what they want to do with their money? If you show them what's the best option, I don't know what their actual rate is, but 90% or more choose the best option. Like I said earlier, occasionally someone will take the second option because they didn't want, a Schwab fund or something, because they had a Schwab fund one day and it lost money, back in like 08, 09 or something. And they're like, so Schwab stinks. And you're like, no, it's a great company. Their investments are great. It's just, it's the timing of when you were in there. But if you don't want Schwab, no problem. We'll move you into Vanguard or whatever it is. So, that's something that, we definitely see with clients. So I think the empathy on that aspect of it is just helping people. I feel like these days with social media and all that, everyone's thoughts are, for me, whether it comes to the advisors that we have underneath us and how we help them and train them, or our clients, that we work with, most people's thoughts are like, well, do people like me? Like, how many people could I get to come to a party or whatever, or something like that, if I were to throw a party? For me, it's more the opposite. It would be like, well, how many people would come to my funeral? How many people did I impact that they would be like, wow, without Brian, I wouldn't be, where I am today. Like, for the help that he gave us, for what he did for us, like, I want to go pay my respects or whatever it is. So I kind of look at it the opposite way, where it's more of, I'm hoping to make an impact on everybody. I tell them, if they're working at a certain company, send me over your benefits, send me your SPD, your summary plan description, right? And all your other stock options, everything else goes into it. It's typically 75 pages or more. We're going to read through it all. And we're going to make sure you're taking every single benefit that you can. Oftentimes you can get our fees waived, because certain companies will pay for fees for a financial plan for you. If you want, you just submit for a reimbursement. So sometimes we find that after the fact. We're like, hey, guess what? You're going to get your money back. We helped you anyways. So, just little things like that just try to make as much of an impact as you can. And so I do think that the, empathy goes a long way in actually caring what's best for pretty much everybody around you.
No, it's great. And it's very clear that your business is built to serve and do what's right for your clients 24/7, 365, which isn't always the way people in our industry are perceived. Did you have an experience early in your career that led you to holding this out as your North Star?
Yeah, bunch, unfortunately, or I shouldn't really say a bunch, but it was more or less, I was told to sell certain products and certain things. And, I remember after doing a little bit of analysis on it, or after being in the industry for a year, because initially you have to have some trust in the company you work for, right? Or you think that you get hired by a company and they're like, hey, this is best for the client, go sell it. It just happens to have a big commission on it. And you're like, okay, like whatever. And then you offer that thinking that's best. And, I basically got to the point where I was like, well, why are we offering so much of this, so much of this, so much of that? When, and just talking with people, other adults that I knew in my life, like none of them had it. And then I remember asking like my managers and VPs and the executives, I was like, do you guys have this? Like, can you open your account and show me this? Or can you log in and show me this for you? And, they're all like, I'm not going to do that and whatever. And my thought is like, why not? I'll show anybody my accounts right now. It's got, anybody that I work with who, they'll see that we practice what we preach. The investments I'm in are the same ones that, clients are in who might be in the same portfolio as me. So, for me, it was kind of when I realized that I was like, well, if you wouldn't purchase this for yourself, or, you wouldn't sell this to your parents, then why are we selling it to other people? And, that was definitely a big realization for me. Well, I was like, well, this thing's okay. It's not great. Each investment or product has a reason to exist, right? There's a time and a place for each one, but a lot of them are niche, and kind of the more niche you get, the bigger the commission typically for advisors. So a lot of people still try to sell that to almost everybody, because they're like, well, I get a big commission, I make a lot of money right now. And I was like, I'm in this for the long haul. At the time I was like, I'm relatively young. I want to make money over the course of my career. I don't want to be doing it just in 1 year and have to keep doing this over and over and over and over again. I want to get a base of clients, provide a great service. And now we're pretty much, for me, I've been referral only for like 6 years, which is nice. So, I don't actively prospect for clients. I just take the ones who, call in or, ask for me based off working with my clients or whatever it is. So, I think it's the realization for me was just when I was like, well, I wouldn't sell this to my parents. So why would I sell it to anyone else? And once I got to that point, it was like, all right, I need to, start looking for something else and maybe make some changes here.
No, completely understand. So you mentioned that you've been referral only for about 6 years. With that kind of as the base case or the base, your client base for growth. If we look out over the next 2 to 3 years, are there any specific growth or other goals that you're focused on as a business?
Yeah, absolutely. For us, I mean, I think, we've doubled our revenue every single year. We've grown a little bit now and we have more advisors. So we're on pace to double it again. But I think going forward, we'll probably be to, from what we have this year, probably this time next year, have double the amount of advisors and hopefully more than double our revenue. But it does go back to, our empathy a little bit, right? Where, the goal is obviously to open offices in other cities and continue to grow. But, revenue is important for us, but it's not the end all goal. So what I mean by that is, obviously we like to help advisors produce and generate a certain amount of income. But eventually some people hit certain numbers and they're like, hey, I'm comfortable with this. They might be like, I'm 27 years old. I'm making, $250,000 or $300,000. Like, I don't want to keep grinding and try to get more clients. I know my practice is going to grow or whatever. And my thought is, awesome. Good for you. Tailor it down, sit on it. I'm not going to, bother you to do more business quarter over quarter because we're some publicly traded company or we have shareholders or a board we got to impress or anything like that. Like, I don't care if you put up bigger numbers every quarter. I hope for you want to or whatever. But if you hit a goal that you're comfortable at, wherever your income threshold is, I'm happy for you. So I think from that standpoint, it's nice too, because we don't bug anybody. We don't bother them about trying to make more and more money. It's not like we're not 100% money driven. And I think that goes a long way where then our advisors do more of the recurring revenue and whatever, and therefore our revenue just keeps growing and growing and growing. Whereas if we're just chasing upfront, higher payout commissions or something like that, well, then you got to do it again and again and again and again every single year. And who wants to do that? So, we train our advisors to do it in the best interest of the client, which is honestly the best interest of you long term. Maybe right now it doesn't feel like that, but in 3 years, you're going to be thankful you did it that way. And obviously every year after that. So, I think the goals would just be to continue to do what we do. We don't have some number of revenue or profit or anything that we shoot for. The main goal for us is to develop great advisors. I say it all the time. I'm like, if I can be the worst advisor at the firm, then we're going to have a pretty good firm. If I'm generating the least amount of business and I know the least of everything out of everyone else, if someone's like, well, I have a question on this. And they're like, oh, well, don't ask Brian. Like he knows less than all of us. I'd be like, great, this is a great firm. Like we're doing pretty well. So, I think it'll just be to continue to bring in more advisors and train them and teach them what we do and how we've built our practice and how we help other advisors build their practices as fast as they possibly can. I built mine in 3 years of active prospecting. And that's what we teach our advisors, and the goal is to get them there, if not faster than me. So, when we recommend they do something, they look over and they see that I'm doing the exact same thing. So why not do it? That's kind of our goal, is just keep generating and keep growing good advisors. And that way, the more advisors we have, the more people we can ultimately help.
That's an awesome outlook. And I wish you guys nothing but the best success. You mentioned kind of hiring advisors and kind of growing the practice that way as well. What would you say to anyone thinking about breaking away from a wirehouse or a large firm model and going independent?
Do it. I don't know. It comes down to confidence in yourself, I think. So I always try to tell the advisors that the clients aren't hiring, Keenan Financial, or they're not hiring you to be their advisor because I run the company or something like that. They're hiring you because they like you. Whereas, I have some friends who work at the wirehouses, and every time I talk to them, I can definitely tell that, the pitch from the higher ups coming down to them is, well, the clients only work with you because you work at, XYZ company, which is just not the case at all. I mean, even when I left, the other companies, my clients came with me every single time. So it's something you got to realize, like they're going to go with you. Yeah, you might lose 5 or 10% of your book, but that's going to happen because there's going to be people who don't answer. I mean, everyone I got on the phone came with me. There was nobody who said no, but there was people who never picked up, but there's people who invest with you anyways. And then 3-5 years go by, you haven't talked to them. You send them 10 emails a year, they don't respond. You call them 5 times, they don't respond. So, you might get some of those people who don't necessarily come back or come with you, but at the same time, you're going to be getting paid so much more money. Our advisors make twice as much as some of those wirehouse people, if not more than that. So I think it's definitely nice. I mean, I know I haven't really worked in one, so I don't know the open architecture either. I don't know if you're required to do certain, funds of your company or whatever, but if you can be independent and just search and find all the best ones, that's what I would want to do. I wouldn't want to be, in a stuffy office right now on a nice 70, almost 80-degree Friday day, right? Where it's sunny and, I'd rather be able to work from home like this or wherever I am, that it just makes things easier. So I would say believe in yourself and just trust your gut and go for it.
Oop, I think it's great advice. What is the skill, speaking of advice, what is the skill that you believe an advisor starting out on their journey today should focus on developing?
Is confidence a skill? I don't know.
I think it can be a learned one. Yeah. I mean, I think it's something that doesn't come natural to everybody, but a lot of people, I think I found people with a lack of confidence can be some of the smartest people out there.
Yeah. I mean, I think you just want to be able to be smooth when you're talking with people, right? Mm-hmm. So, I didn't really know exactly all the questions we were going to get into today, but I was confident to be able to answer them in a relatively professional manner, right? Where we'd have some fun, but they'd come off well. And same for you. You don't know how I'm going to respond, but you're confident in your abilities that you'll still be able to keep, the interview going the way that you want to. So I think that's the biggest thing. That we have some advisors who, or some of our younger advisors who are right out of school or whatnot, and they know everything. And then as soon as they get into a meeting with clients, they pretty much freeze up. And then you can kind of see they, might turn a little bit red and they get nervous. And then you're just like, hey, take a deep breath, like relax. Like, the answers to everything they're going to ask. You probably know way more than they think you even know. So just talk to them, ask them, why they took a meeting with you, for basically what they're looking for help with, what you think you might be able to help them on, what the goals are, time horizon, risk tolerance, all that, just some of the basic stuff until you get more comfortable and then dive deeper into everything else. So I would say it's just believing in yourself and having the confidence that, if they're taking a meeting with you, they're interested in financial planning. So typically what I joke with our team about, I'm like, as long as you don't give them a reason not to hire you, they're probably going to hire you. When is the last time you went for a consultation with a doctor? Maybe some people have, and maybe your shoulder hurts or something and you need to get a shoulder surgery. And you're like, I don't know, man, I don't think I'm going to let that guy do surgery on me. Like pretty much never, they're like, hey, here's your x-ray or your MRI or whatever. Here's the problem here. Here's what we would need to do to be able to fix it. And you're like, that sounds great. Let's do it. So it's usually, unless you give them a reason for them to think that, like, oh, I don't know, something seemed a little off there. It was a little bit weird when we started talking about this. He seemed a little sketchy or something like that. Then they're probably going to hire you. So, if you're good at marketing or just getting yourself in front of people and then you just act like a normal person, don't be too uptight and all that. You don't have to have a full suit on with tie and all the time anymore. Obviously we're both dressed relatively casually today, which is nice. So I think it's just having confidence in yourself that you can do the job. Really, I would say is what it is in the best interest of the clients, and then it should be relatively easy.
Well, that's very sound advice, and I love hearing it. I mean, I think empathy is definitely one of the things that I've heard before, and I personally believe in, as I can tell you do. But confidence is definitely something that I think you need in this business, and for some can come a little bit later than others. But either way, I think it's definitely a skill that needs to be learned and used.
Absolutely.
So now we're coming to the conclusion of our interview process here, which we greatly appreciate you being a guest on the podcast. And so I've got a couple of closing questions for you.
All right.
Let me know when you're ready.
I'm ready.
Okay. Nickname?
Keenan.
Hobby?
Golf and boating.
Favorite mountain to ski?
Park City.
Yep. Profession if you weren't an advisor?
Probably something fun like a dolphin trainer, or maybe like a bartender at like an exotic resort or something.
Bucket list travel destination where I guess you would be a bartender at?
Somewhere warm, some island somewhere for sure.
Last thing you watched for fun?
Succession, I think, was the last one that I saw.
Early bird or night owl?
Early bird these days.
Most used emoji in text messaging.
Not a super fun one, but it's got to be just a thumbs up.
Best place you've ever golfed.
I would say Vidanta in Mexico.
Favorite Boston sports team.
Probably the Patriots.
The 60-40 portfolio, a classic or a relic.
Both.
Favorite way to get active.
Usually just the gym.